Bitcoin was the first example of a cryptocurrency that used a blockchain. And since then, obviously, as we know, many more have spawned. It is critical to understand that there is no other cryptocurrency that has both a network effect and the decentralization and the security that Bitcoin has, which makes it essentially on any practical level impossible to attack or impossible to censor, impossible to shut down. And that is one of the major things that separates it from every other cryptocurrency that's out there. So from my perspective, and for many people who have learned a lot about Bitcoin like me, they're very quick to distinguish between the two, right? Like Bitcoin, not crypto. There's a lot of, I'm not saying that there's no use cases for other cryptocurrencies or other blockchains, but if you want a form of decentralized money that people can use for like freedom money and aren't sort of subject to authoritarian dictatorships, Bitcoin is really the only way to go. So I think that it is critically important, among many other things that I would love to say, is that Bitcoin is the premier, the first, the very initial cryptocurrency, but it is different from all of the others in very important ways.
So it's the functioning version of cryptocurrency that exists right now.
There's plenty of people who would disagree, but I think that's exactly how I would view it. Yeah.
Okay.
So if the average person doesn't really understand this and is going to say, well, why would I use crypto or in this case, Bitcoin? How do I trust it? How do I know that this isn't, something similar to, Dogecoin with what Elon Musk was doing? There's a lot of pump and dump schemes, Craig, as you know, when it comes to stock trading. So where exactly does this fall in terms of market manipulation, understanding the value of it? Like, how does one determine that one Bitcoin is worth, $40,000? What is that? Is that backed against anything?
So I don't know, Craig, if you ever want to hop in too, I don't want to take
Jason, you go ahead.
All right. So the US dollar exchange rate for Bitcoin is essentially determined on a supply-demand basis, right? You have people who want to sell their Bitcoin for dollars and people who would like to buy it. And that's essentially, if there's more people who want to sell it, then the price goes down. And if there's more people who want to buy it, the price can go up. The market cap of Bitcoin makes it more difficult than any of the other cryptocurrencies to market manipulate, but it's essentially a supply and demand issue. Bitcoin is backed by the computational energy that goes into it. It's backed by the tens of thousands of distributed nodes that validate the monetary system and protect it. It is the thing that does the backing. It is not backed by anything because it is the thing that you have to work for to get. So it's a monetary technology similar to gold in the sense that you need to work to dig gold out of the ground, refine it, and then bring it to market. And for many years, obviously, we all know that dollars used to be backed by gold. And the reason for that is because gold is the real monetary value, that base layer. And now Bitcoin gives people an opportunity to have that base layer, that scarce and hard money asset through a computer network. And so when you ask if is it backed by anything, it's backed by a lot more than dollars are. And certainly it's the thing that does the backing. It's not backed by anything. It is the thing that backs.
Greg, hop in there.
No, I think one of the things that folks need to realize is, and Jason made this point last, is what is the U.S. dollar backed by? We in 1971, Nixon removed gold as the backing for the U.S. dollar, and so we've now lived in a system for the last 50 or so years where the dollar's value really has not been backed by anything specifically. Some people would argue, and maybe so, that it's backed by our Air Force carriers, it's backed by our military, it's backed by the government's ability to tax and pay for its expenses, but it is not backed by any hard asset that folks would think it's backed by. So similar to Bitcoin, it's or different than Bitcoin, which is backed by this computational power and the ability to mine and create them. And I think the second important point that we need to think about is the supply of Bitcoin and how that comes about. The supply of Bitcoin is algorithmically determined already. So there is no ability to create more Bitcoin than has been predetermined by the network already. So every day, 900 Bitcoins are created. And every 4 years, we have that number of Bitcoin that is created daily. And so there is no ability to change the supply growth algorithm for the currency, which is very different than how we think about dollars, which is that the government can come in at any day and create money and as much money as it wants to do whatever it wants. And so there is an environment that we live in now where the dollar's hegemony, its role as the world's currency, reserve currency, can and should start to come under pressure as foreigners and everybody starts to worry about our debt load here in America, the government's printing abilities, and what we've done with that money. And so Bitcoin provides us with a potential off-ramp and an ability to possibly create a new system where money is backed by this computational power. There is no ability for any entity to create new Bitcoin outside of what is already computationally approved. And society can feel confident that when it puts its money or puts its value in this asset, that it won't be debased over time by some entity that deflates it by creating more supply. So that is, I think, a powerful, if not the most powerful part of the story behind Bitcoin.
Now, we have a great supporter in the chat, JR Jr., who knows this stuff pretty well. I believe he's a big supporter of modern monetary theory. Our friend Steve Grumbine will be on Friday. Go figure. So one of the questions, of course, that comes up is when currency is digital as compared to physical, governments are more readily able to seize it from sovereign citizens. So what is the protection? Because I've heard of many circumstances where somebody has some form of cryptocurrency, even Bitcoin, where they have a password, and if they can't remember it and they can't access it, and then they lose their Bitcoins. I mean, I'm sure that those are extenuating circumstances, probably extremely rare, but nevertheless, there is this fear of putting something that isn't a hard asset. When someone says, I have a Bitcoin, it's like, okay, that's great, but I can't touch that. It can, it's kept online. It's somewhere in the cloud, whatever you want to call it. So how does one actually protect themselves when something like this happens? Because we've seen what has happened on Capitol Hill. I mean, obviously Elizabeth Warren comes to mind, who has been fighting very hard against cryptocurrency and believes that it should not exist. So what do you guys say to, somebody like JR who is concerned?
Why did she say that? No, I don't know what her beef is with that.
So there's a lot of different questions there. So yeah. I'll say the idea that the money isn't real because you can't touch it. Most of the dollars that you've had over the last 20 years that you've spent and saved and invested, you've never touched, right? They're just numbers on a screen, and that's the reality of it, right? Bitcoin is different in the sense that if you do really a mild amount of education about how to secure your Bitcoin and protect it, it can't be seized by the government. It can't be taken against your will. It can't be stolen. If you do really a small modicum of preparation and sort of learning about how it works. That's beyond the scope of the discussion now, but that's not a concern. Certainly the government is able to take even hard monetary assets, right? In the 30s, the government took everybody's gold and gave them paper dollars for it, and then devalued those dollars against the gold 6 months after. So it's not as if that having something you can touch protects it from being taken. In fact, it's quite the opposite, right? The fact that gold is slow and heavy and hard to transport means that it was easier for large banks and governments to centralize gold and give everybody paper, which doesn't really hold any value once the peg to that hard monetary asset gets broken. So I think that's important that Bitcoin is perfectly reasonable as a monetary technology. It checks all of the boxes about what makes a good money and what makes something valuable. It's scarce, it's easy to transport, it's divisible, and all of those things are true about Bitcoin, just like they are true and probably in most of those categories of what makes good money. Bitcoin is better than dollars or even gold because it's more transportable and all of that. I'll save you. I can talk all about Elizabeth Warren's stance on crypto. I'll say really quickly that Elizabeth Warren and I agree almost completely because I don't see that cryptocurrencies really have much value except for Bitcoin. So I think that she and I would agree on almost all of them, and that she's a little bit misguided about the value and the potential that Bitcoin has to really advance some of her progressive goals. Yep. And I'll leave it at that.
Thanks for watching. If you want to support our mission to transform politics into service, please like this video, subscribe, follow us on social media, and consider joining our Patreon, where you'll get early access to our interviews as well as other exclusive content. Links are in the description. Peace out.